traders, Raghee here, and in this update we're going to talk about gaps, all the FOMC events that we have and had today, Tuesday, Wednesday, and Thursday, and how that affects our day trading decisions and the volatility that we are inevitably this week going to have to trade or at least deal with. All right, so first of all, let's start our analysis on the daily. This is very much a part of the process that I taught in the day trading playbook, which actually live trading today just completed. And the first thing we knew is we had a gap on our hands. The market opened above, just above the close and the high, right in that area. And with that very slight, barely gap open, we are anticipating what? Well, let's take a look at the intraday. When we get a gap up, I think the biggest mistake you can make with a gap up is to assume it's going to keep going, especially if we opened above both the previous session's high and close. And this was, again, very close. So what I typically look for is the fade. Now, what is a fade? A fade is we saw the gap up, and a fade is selling into the strength. So the market gaps up, that's strength, and the fade is a short sell. The fade is a short into that strength. Now, I'm not a big fan of shorting the NASDAQ. It's probably one of the strongest, if not the strongest index that we have right now. It's very, very much controlled by the bulls. But if in the first handful of minutes after the open, we have a high-low range that's breached to the downside, then that typically commences what we saw happen in the NAS, which is the fade. Well, we loved that. We want to see the market faded after that gap because as that market's melting down, it gives us opportunities to start looking for buys to get long the NASDAQ. And I'll tell you what, we bought, our trigger was between 30 and 10. So we had opportunities to get long in this area. So basically a 20-point area or an area on the mini of $400. So $400 range in this area that we're building a position in. It's really important to know the ranges when you are day trading because those ranges are going to identify, are going to quantify your risk from aggressive to moderate to conservative entry levels. One of the easiest ways to mute this risk, one of the easiest ways to absorb it, especially when that trade is happening before 10 o'clock, is to play with the options, to enter that with the options. You can handle all the volatility. And that's exactly what we did this morning in live trading. So the market just sort of meandered around for a while and then ultimately started to move higher as we got closer and closer to the close. Ultimately, what we ended up doing is managing this position into this area here as resistance, which it stuck for a while. The great thing about having a near-term initial target is that you can scale out of, I like to scale out of 50% of my position, maybe another 25 as the market moves in our favor. That leaves a trailing 25% position to take until the end of day. And then, closing out the trade before the bell, preferably 10 minutes before the bell, actually. But that gap fade was kind of a big deal. Now, what's another reason for the market's weakness here right off the bell, aside from the fade? We had actually the FOMC, specifically member Williams speaking right at the bell. Okay, now they don't have to start at 9:30. We know these Zoom conferences aren't that strict in terms of the time, but we know the market's anticipating Williams, the 10-year bond auction, and the NASDAQ is probably going to be more so than the S&P, more so than the Dow, sensitive to the yield of the 10-year, right? The NAS is going to like that 10-year yield heading lower. As if this isn't enough FOMC shenanigans for the week, we've got Bostic tomorrow, both before and I believe just after and then again later in the afternoon after the CPI data tomorrow. Fast forward to Wednesday, we've got the Humphrey Hawkins testimony from Powell. So we have the Fed Powell testimony. I believe that's semi-annual monetary policy report. That's going to be both Wednesday and Thursday. So we're going to have FOMC events specifically Powell on Wednesday. And I will say this, the market hasn't been thrilled to be long in front of Powell. In other words, the market rather sort of sell first, ask questions later. So be aware of that going into Tuesday. I'm going to be with you all in the futures room. We'll trade Tuesday together. I'll see you at 9:20. We'll see what kind of setups of our 5 pitches we can get. And until then, have a great one. I'll see you at 9:20 in the futures room. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.